the number of fundamental uses, not only technologically, but also medically, continue to advance on silver, and the demand and the number of uses continues to outstrip supply. There's a major disconnect between where paper silver trades at and where physical silver trades at, and I believe that those two need to narrow.
This week's special with Miles Franklin Precious Metal Investments. 2021 1-ounce silver Kangaroos for only $3.80 over spot. Call us at 1-888-81-LIBERTY. That's 1-888-815-4237. Hey everyone, this is Elijah K. Johnson with Liberty and Finance. And back with us today is Phil Streible, the Chief Market Strategist at Blue Line Futures. Phil, thank you so much for joining us today.
Yeah, thanks for having me.
It's great to have you. And I'd like to talk about Powell's speech today. Now, Chairman Powell of the Federal Reserve said that the Fed could start tapering by the end of the year, although he said, any rate hikes, different economic conditions are going to have to show up before that happens. So your perspective on how Powell's speech kind of shaped the market dynamics today?
Yeah, investors were really connecting the two between the beginning of tapering and a interest rate hike to follow quite quickly. And what Chairman Powell did was he said that they did not want to make any kind of ill-advised moves. So he separated the connection between tapering and rate hike. And what they did was they really pushed the focus on the recovery and the labor recovery. So we're going to go back to an extremely data-driven sense in the market. But by him being so dovish, the concerns were primarily around the Delta variant and that impacting the labor recovery. That's the reason why we saw the market, just all markets, basically start to inflate as the day went on.
If there is fear regarding the Delta variant, why do you think the markets are still rising?
Because the Delta variant, what it does is it slows down the pace of the recovery with the labor market. And the labor market is the catalyst that the Fed needs in order to actually ink on paper when they're going to raise rates. So as long as that's lingering out there, the pace of this recovery on a jobs front just isn't there, so they can't do anything. So your next big opportunity in the markets for buying any kind of correction is going to be when we have next week that ADP number that comes out on Wednesday and then followed by the payroll number on Friday. Any one of those two coming at higher levels, that's where you'll see any kind of correction occur.
So overall, this message from the Fed was dovish, it seems like.
Yes. And the reason is that they came out and they really reaffirmed that they're not going to do anything for quite some time. They're really going to focus on becoming more data-driven, looking at the missing component before they can raise any kind of rates, which is a snapback in employment. So your next opportunity where you're going to be able to buy a correction in most markets, including gold and silver, is going to be the ADP report, which comes out next Wednesday, followed by the payroll report that comes out on Friday. If any of those two beat expectations, the hawkishness will slide a bit over. You'll see a small snapback on this launch that we saw today, and I think that's your next opportunity to get in.
What is your perspective on how the stock market has been reacting recently? Because we've just seen it continue to hit all-time highs, and again today hitting an all-time high with the Fed announcement.
Yeah, it's pretty incredible. The Russell 2000 hasn't hit it yet. That's your small cap stocks. However, all your mega cap, your big technology names, your NASDAQ, your S&P 500, those have done quite well. They actually do well when you go into other economic regimes like a stagflation or even a deflation. People will go into large mega cap names for safety. So the S&P 500 and the NASDAQ paint a very good picture coming into the year end, regardless of how the economy performs. Where you get the Russell going up is if you get the reflation trade. And that breakout that we saw over 2251 caused everyone to jump back into all their small caps. All those favorite stocks that people had back in the fall and parts of the spring, they were all green lighted to jump back into them today with that breakout.
And as for gold and silver, we have seen a pullback this last month. However, on the Fed's announcement, they both rallied. Gold is back above 1,800 and silver just above 24. Where do you see them going in the near future?
We're right at our resistance points on here. So the probable range on gold, for instance, was 1771 on up to about 1819. It does fall in line with a lot of major moving averages, which gold has failed at these points. If we could break through here, so say Wednesday's ADP number comes out and it's a bit of a miss, or the non-farm payroll is a miss on Friday, you should see gold extend its gains up to our next three-star major resistance, 1835 to 1840. Again, if you get those better numbers, you're going to see a pullback. Silver rallied a bit, outpaced gold about 2-to-1 on after Powell's speech, up about 1.5%, for gold up about 0.75. That's more of that reflation play, more of that growth play, more small cap stocks. Silver's got a lot of work to do. It broke out just above its near-term resistance, but we've got several legs higher, and it's almost every round dollar higher of resistance.
And if we kind of rewind the tape here and we go back to the end of January, early February, and we saw the first silver squeeze, and we saw silver, touch, around $30. We're $6 below that, even though, there has been this movement to accumulate physical silver. What do you make of why silver is $6 below, the high that we saw, early February?
Yeah, a number of factors. We are seeing a lot of hedging on the front. So you have a lot of paper silver come in. It's the miners that sell forward production, just like an oil refinery sells oil going farther out using contracts. They have done that. That's underpinned quite a bit. Also, the demand hasn't been there as much that we would like to see with solar panels, green energy, things like that. It has come off a bit. And I really believe that, investors, they saw gold outperform silver, and they tend to get a bit frustrated. The washout that we saw last week, again, had really pressed them out. So traders are looking at other alternative assets. We've seen Bitcoin recapture 50,000, Ethereum break back through 3,000. I'm not saying right or wrong. If you know me personally, I'm a big silver bug. I'm a believer. I think that it's one of the most undervalued assets on the entire planet. So don't think I'm bashing silver at all. I'm as frustrated as you are that it hasn't taken off.
So in your view, what makes silver one of the most undervalued assets on the planet?
Because of the fact that the number of fundamental uses, not only technologically, but also medically, continue to advance on silver, and the demand and the number of uses continues to outstrip supply. There's a major disconnect between where paper silver trades at and where physical silver trades at. And I believe that those two need to narrow. Like I said, that, if you look at silver that's held in exchange warehouses, like something like the CME, there's a finite amount of it, where there's a number of paper that's out there chasing those prices. If people were to take delivery of all the silver that's held within the warehouses, you would see a shortage that's out there, and the prices would naturally come back up, much like we see box beef cutout values and live cattle prices. They tend to narrow and come disconnected. I think silver needs to see that, where prices come back up to the physical sense.
And as we've seen this pullback recently, silver has been hit harder than gold. We've seen this gold-silver ratio around 75 now, and that's relatively high. Where do you see that heading in the near future?
It's tough to say. It depends on economic regime. If we go into a deflationary period, you're going to see gold futures outpace silver. if we go back into reflation or stagflation, silver futures will continue to come up. Remember, gold and silver, they're, as much as people link the two together, they are completely separate assets. Silver is actually really used. It's a direct correspondence of reflation. It's actually the Achilles heel of it is that it's so interconnected with gold and gold prices that you have people with the same mentality buying and selling them together. If silver was able to trade on its own free by itself, you should see silver prices move up with prices of oil and lumber and agricultural products. It's strictly an inflation play where gold futures are something that's more of a store of value.
Now, going forward here, the demand you're saying for silver is largely going to be industrial, and it's used all over industry. And we're seeing the production, we've seen this silver supply deficit for quite a while. Then your perspective, it seems like for the long term, you're looking for increased demand for silver and not as much increased demand for gold.
Yeah, gold has to. What needs to happen is gold has got its own battle going on with cryptocurrencies on the dominant, market regime of what is a viable asset class to hold given a number of different outcomes. Where, silver, I believe that it would take one catalyst to start to get it to break out. You could see how risk is just slowly spread out, and then all at once it builds up, and it's like a pot that boils over. So silver's waiting for its next catalyst in order to do that. I'm not sure exactly what it's going to be. It could be just a sheerly technical breakout, but I know we've seen so many stocks, so many other asset classes really take off in value that it seems like silver goes through a cyclical motion. And, I think it's advantageous to take advantage of lower prices for long-term price appreciation.
Definitely. And a lot of people have been saying, how right now seems to be a good time to accumulate. However, some people are saying it could go lower from here. Your perspective?
Yeah, I don't see sub $20 silver. I believe that $22 is far too cheap. We saw a rejection on the last time it broke 23. So we've got to be right around that right price where people you get that bull bear line. I don't see as much, opportunity for reward for someone to aggressively short sell silver below $23. It just does not make sense. Where when you get a massive price spike, you'll see short sellers come in, but not only them, but mining companies that want to forward hedge production will come in. It's advantageous for them as a company to short sell when you go north of, say, $30, $35, because it could smooth out their profitability over the long run.
So it seems like little downside potential, but high upside potential is what you're seeing.
Absolutely. I think that it's very skewed downside to upside as far as risk reward. I see the upside being much greater.
Well, Phil Streible, we really appreciate all your time and insights today. Before we let you go, did you want to share with the viewers any last thoughts you'd like to add, and where our viewers can find you online?
You can always reach out to us at www.bluelinefutures.com. We've got a great research report that we write on gold and silver, as well as a macro backdrop that we put out every day called the Morning Express, and it's also written by my partner, Bill Baruch.
Awesome. Phil, thank you so much for your time, and God bless.
Thank you for having me.
This week's special with Miles Franklin Precious Metal Investments. 2021 1-ounce silver Kangaroos for only $3.80 over spot. Call us at 1-888-81-LIBERTY. That's 1-888-815-4237.